guys, I'm here to share with you about my stock account. Today my stock account has closed down to 69,185.19, and the United Natural Gas closed up 0.17% to $6.86 per share. SQQ closed down 2.41% to $19.82 per share. Right now, the market sentiment is generally higher, as the Dow Jones Industrial Average closed up 0.73%, Nasdaq Composite closed up 0.94%, and S&P 500 closed up 0.67%. Today, the auto manufacturers led a gain of more than 5%. Powell's cautious speech could not hide the hawkish nature, and the outline for Fed's interest rate higher and longer emerged. The lessons of last year's overly hawkish speech scared the market, and Jerome Powell has become more cautious this year. On August 24th to 26th, the 2023 Jackson Hole annual meeting for global central banks was held under the theme Structural Changes in the World Economy. On August 25th, local time, Powell delivered a speech that attracted much attention. Compared with the last year's 8-minute and significantly more hawkish speech, Powell's speech lasted 20 minutes, and while signaling that interest rates may continue to rise, he also repeated the stress that he will be cautious. Regarding the risk of doing too late and doing too much, Powell admitted that doing too little could entrench the above-target inflation, which ultimately requires excessive monetary policy tightening to combat more persistent inflation with high employment costs. But doing too much would also cause unnecessary damage to the economy, and the real interest rate have now turned positive, well above the market's mainstream estimate of a neutral policy rate. Previous austerity measures may not yet be fully effective across the system, so caution is needed from now on. On one hand, Powell welcomed the slowdown of U.S. price growth, emphasizing that this is mainly due to the tightening monetary policy and the easing of supply chain crisis. But he also warns that even with recent inflation data being favorable, the battle against inflation still has a long way to go. Therefore, he said that the Fed is ready to raise interest rates further. Overall, the signal for Powell's speech remained hawkish. While the Fed may hold off interest rates at its September meeting, another rate hike may be possible until the end of the year. In July, the Fed has announced it will raise the price range to 5.25% to 5.5%, the highest in 22 years, which is also the 11th rate hike since March last year. The cumulative rate hike has reached 225 basis points. While everyone is predicting the peak of this interest rate hike, Powell said a suitable return to 2% inflation would require a period of below-trend economic growth and some cooling in the labor market. While the rebalancing of the labor market is still ongoing, monetary policy adjustments may also be required if labor market tensions do not ease. Former U.S. Treasury Secretary Summers analyzed that the Fed may need to raise interest rates at least once in the coming months, and there aren't many signs of slowing down, with some estimates that the U.S. growth could even exceed 5% in the third quarter. Behind the hawkish rhetoric, Powell, who is well versed in the arc of balance, is also trying to avoid speaking too hawkishly. But he hinted that the Fed may leave interest rates unchanged at its September meeting, as the market expects. Michael Aron, chief investment strategist at State Street Global Investment Advisor, said, Powell continues to walk the tightrope, and his series of speeches shows that he's satisfied with the progress of monetary policy and the easing of inflation, but he also insisted that the Fed still has work to do. After Powell's speech, Bill Gross said that the interest rate were higher, and somewhat euphemistic message he got from Powell's speech. The 10-year yield is likely to rise to 4.5% in the future, while the short-term bond rate are expected to remain relatively stable. ECB President Christine Lagarde's speech at the annual meeting of global central banks in Jackson Hole was more cautious than the Fed's unstated but roughly outlined monetary policy path. He did not say whether the ECB will continue to raise interest rates in September, but described a time of uncertainty, stressing the need for certain central banks to provide anchors for the economy and ensure price stability is consistent with their respective mandates. Indeed, the subtle difference in Lagarde and Powell's rhetoric reflect the different economic and inflationary patterns in the Eurozone and the United States. While the Eurozone's economy has so far narrowly avoided recession, but is still on the brink of recession, and the U.S. economy has shown a greater resilience. In terms of inflation, the Eurozone CPI in July was still above 5%, while the United States has entered the 3 era. IMF Managing Director Georgievas expects a divergence in global monetary policy after most major central bankers were busy tightening credit conditions last year to slow price gains. For example, the U.S. economy is growing faster than the European Union, and there will be some divergence in monetary policy. In the cycle of rate hikes, the Fed has violently raised interest rates by 525 basis points, while the ECB has raised interest rates by only 425 basis points, which is exactly 100 basis points lower than the Fed. At the annual meeting of Jackson Hole Central Bank, ECB Governing Council member and Bundesbank President John Nigel said he was not confident that the inflation was under control enough to stop raising interest rates. In addition, Robert Hausmann, the head of the European Central Bank's governing board and Austrian Central Bank, also said he may have to continue raising interest rates more or less to push Eurozone inflation back to the target level. There is no signal of an inflation alert being lifted at the moment. My guess is to raise interest rates a little more in the future, but ultimately it'll be determined by the data. That's all I have for today. Thank you for listening. Don't forget to subscribe and see you next episode.